All right. Well, I'm going to talk about biotech stocks for the next hour. One of the most severely beaten up, ignored, and abused sectors in the entire market, and that piques my interest. Also, I do have a degree in the subject from UCLA, so I have been in the biotech game for a very long time, roughly half a century, and was involved in founding one of the crucial and early biotech companies out there. If I'd only stuck with biotech, I'd be richer than Croesus right now. So let's see how we're doing on time. Let me check the markets, see how my trade ideas are working. And 686, Dow on the down, recovering slightly here. Berkshire 269. Good thing we got out of that one. Apple down 4, Tesla down 57, and the VIX all the way up to 33. Impressive. And they are hammering the chip stocks today because nobody wants to buy chips in a recession. NVIDIA down 9 to 156. Okay, so let's get the show on the road here. I'm broadcasting to you live from Silicon Valley because it has the best broadband in the world. Let me give you the 90,000-foot view first. We are on the eve of a golden age of biotech and healthcare investment. The pandemic has flooded the industry with billions of dollars, which they are investing to create a new biotech revolution. A wealth of new 10 baggers is presenting itself. Best biotech entry point in a year, and actually several years, is at hand. To cash in, you must know what names to shoot for and what you are talking about. So I think it's time to go flying. I'm always a sucker for flying. So let's wind up the engine and get going. Why listen to John Thomas? Well, I have 53 years of experience in the global financial markets. 10 years as the economist correspondent in Tokyo and later the White House, 10 years running the international equity division at Morgan Stanley, time out as a Marine Corps combat pilot in Desert Storm, 10 years running the first international dedicated hedge fund, 5 years fracking for natural gas in Texas, and now 14 years publishing the Diary of a Mad Hedge Fund Trader. One of the founders of the modern hedge fund industry who's still working. Take my half century of trading experience and add it to your own. Learn from learn from my trading mistakes. You don't have to repeat them, and believe me, there have been plenty. Oh, if you ever need a ride in a 100-year-old biplane, I'm your man. That's me flying over the Pacific coast off the Malibu coast. Okay, now we always have to work hard to get to the next page. So why listen to John Thomas? Well, my family origins are very humble. Growing up as the oldest of 7 children on a remote farm in Southern California, I lived the all-American childhood playing Little League baseball and becoming an Eagle Scout. Wasn't much to do in the old days in California except hunting, so I picked up a job as a paperboy for the Los Angeles Herald-Examiner. I found the stock pages, bought IBM at 20, sold it at 30, and suddenly found a far better way to make money than delivering newspapers on the back of a bicycle. By the time I was 16, I earned enough money to fly to Europe. By the age of 17, I had visited more than 50 countries and spoke 4 languages. That's me hitchhiking in the south of France, where in the 60s, people were so poor they couldn't own cars. It took a long time to hitchhike anywhere. And that's one of the first papers I delivered covering the Kennedy assassination in 1963. At UCLA, I majored in math and DNA research, which landed me a job at the nuclear test site in Nevada. Their yield didn't mean interest paid, but millions of Russians killed. Didn't see a future in that, so the government set me up to Southeast Asia for a few years of intelligence missions, where I learned how to fly and jump out of perfectly good airplanes. There I advised the militaries of America's Asian allies. As the war wound down, I became a foreign correspondent for The Economist magazine in London. When they learned I had a math degree, they switched me over to covering the Asian economy and the stock market. Ta-da! After 10 years of government service, all I ended up with is this box of medals, which I bring out once a day on Veterans Day. And That's me with my 45 caliber Sten gun in Burma, which used to reliably jam on every 6th shot. As a foreign correspondent, I covered China during the Cultural Revolution, was the first American reporter to visit North Korea since the Korean War, and covered the rest of the continent all the way to India. If you're looking why I'm so skinny in that picture, it's because they had just had a famine in China where 50 million people died. You couldn't buy food for any amount of money. Even a little egg cost a fortune in those days. So there is no alternative for food, which you find out very quickly during a famine. I figured out very quickly you didn't have to be that smart to make money in the stock market. So I got into the industry, joining Morgan Stanley. After 10 years there, I started my own hedge fund. And that's me losing the All Japan Karate Championships, never enter a karate final with a broken wrist, which I did, but at least I can say I made the finals. I rapidly became the top performing hedge fund of the 1990s, eventually bringing in a 1,000% return in a decade. This was back when there were only 25 hedge funds with no more than about $50 or $100 million each. It was really a tiny business in those days. Then the money really started to pour in. It's an understatement to say that when your income goes from the thousands to the tens of millions, it really has a big impact on your lifestyle. You get to do things like fly your own private plane around Europe, buy the latest hot car, go marlin fishing in Mexico, and collect vintage Rolls Royces. I sold my hedge fund in 2000, retired to go into the oil and gas industry. After making a killing there, I missed the stock market and started up the Diary of a Mad Hedge Fund Trader in 2008. Okay, just checking the market again. I now spend my days pursuing my first love, finding winning trade alerts, but I now do it from my 3 mansions in San Francisco, Lake Tahoe, and Zermatt, Switzerland, where I am headed in a few weeks. And I've quit turning millionaires into billionaires. There's far more satisfaction leveling the playing field for the average guy and teaching him how to trade. And that includes you. If I can take a $50,000 account and turn it into 500,000, that is more job satisfaction than I could ever get anywhere. However, every silver lining has a cloud. In 2020, I had to pay $8.2 million in taxes on $20 million in trading income. Ouch. I just thank goodness I can pay that amount to Uncle Sam and not have a dent in my lifestyle. In the little free time I have left, I pursue my other love, flying vintage aircraft on weekends. If you see an old plane flying loops over San Francisco or London these days, it's probably me. That's my 1932 de Havilland Tiger Moth. That's a 1938 Boeing Stearman. That's a Stearman there, and that's my 1947 RAF Chipmunk in England, which can only land on grass fields. Ultimate luxury, of course, is to give to those who need it. As a Marine Corps veteran, I volunteer for grief counseling for widows and orphans, and I'm a major donor to Wounded Warrior. When the wildfires hit California, I visited the main evacuation centers and handed out $10,000 worth of Target gift cards. And that's me going through my in-laws' house, burned to the ground. You can see there's a SIF box here where they're looking for a wedding ring, which they eventually found because it was made out of platinum and not gold. Platinum has a much higher melting point than gold. One of the little tidbits you learn after trading commodities for 50 years. So the seminal investment themes of our lifetime are technology and biotech and healthcare. These two industries will account for 80% of stock market profits through 2030. Invest in these two industries, you can forget about everything else. You will have the waterfront covered, at least the most interesting parts. You already know tech well, as has been a major driver of stock prices since the 2009 crash. That is about to change as biology becomes the electricity of the 21st century. Test your biotech and healthcare IQ. These are the 10 largest drug companies in the world listed by profit, and these are their drugs. Humira for arthritis. Pfizer has Lipitor for cholesterol. Amgen, rheumatoid arthritis, Roche Holdings, chemotherapy, Celgene, multiple myeloma, Johnson & Johnson, Crohn's disease, Amgen has anemia, Roche Holdings has breast cancer, and GSK has asthma. Imagine the future. One day of exams will specify exactly when and what you will die of. A program will then specify a treatment regime that will postpone your date of death, possibly by decades. Another program will enable you to increase your quality of life right now. The reality is you can get this cutting edge analysis and treatment today at a secret San Diego lab, but it costs $25,000 and is not covered by insurance. In a decade, this process will be available to everyone for a mere $100. Live another decade and you will easily live to past 100. Healthcare has been a blowout performer over the last 15 years. Here you can see the XLV ETF, which we actively trade, has gone from 16 to 132. That's about that is a 650% return in 10 years. And biotech has done even better, up 800% in 10 years. And looks like we're bottoming out around here and getting ready for another run to the upside. So what can biotech do for you? Well, this was a recommendation we had a couple of years ago. We had a one-day move of 85% when Biogen announced a new Alzheimer's drug, the first new drug in 16 years. So yeah, we got everybody out here at the top as soon as they could execute. So yeah, those are the kinds of moves that are not only possible in biotech, but fairly common because you do get volatility bunching up around single announcements. So what has been holding back biotech and healthcare until now? Well, healthcare is the last 19th century industry, making it ripe for disruption with thousands of local monopolies. It is also heavily protected as a major campaign donor. Available stock research is minimal and difficult to understand. If you don't have a degree in biochemistry, the industry is a political football with threats of nationalization, national health care, and drug price controls constantly ebbing and flowing. As a result, biotech and healthcare have been unloved and ignored for years. The end result is that stocks are cheap, with many growth companies selling at substantial discounts to the main market. What will change going forward? An exciting combination of new technologies is coming together, much like the creation of the PC, Windows, and the internet all at the same time in the early 1990s. The result of that revolution was a 10-fold to 1,000-fold stock performances. The same will happen in biotech and healthcare in the early 2020s. This time it'll be human genomics, supercomputers, big data, and advanced algorithms that come together and create a new golden age for biotech investment. Most human diseases will be cured within a decade, spinning off immense profits for the innovators. Healthcare, I keep saying it's the last 19th century industry. US healthcare is an agglomeration of 1,000 local monopolies spread around the country with tens of thousands of middlemen taking commissions. Some drugs and supplies get marked up 10 times. I had to go in for a minor procedure at a hospital last year and ask how much they were going to bill me for a paper gown. And they wanted to charge me $250 for my paper gown. So I went on to eBay, found out that I could buy the same exact paper gown for $2.50. So I bought 10 of them. I went into the hospital. I said, is it okay if I use my own gowns and so you don't bill me? And they practically threw me out. I mean, you ask the price of anything anywhere in the medical supply chain and people get really upset with you. Most of America's 3,000 counties only have a single provider. The industry is ripe for consolidation and disruption, creating huge M&A opportunities. And deregulation is the key, eliminating protections, filling in the moats, and opening up the market to competition. US now pays double the healthcare costs of Europe, but with our technology, it should be half. I know people who fly to Mexico to get their surgeries done because even taking the travel expenses into account, it's cheaper to have your healthcare done in Mexico, even cheaper than the copay for your procedure. And often the doctors went to the same medical schools as your US-based doctors did. So here's our MadHedge Biotech top 5. They include AbbVie, Allogen Therapeutics, Amgen, Cassava Sciences, and Illumina. And these are all researched by our full-time in-house biotech researcher. We can get reports on any biotech company at any time with fundamental research and visits to the company. So AbbVie has a huge dividend, 4%, dominates with the rheumatoid arthritis drug Humira, which I know a lot of you have heard of, unfortunately. That's a $4 billion a year seller. They're also in the Botox business if you want to look pretty, and they're also in immunosuppressants. We see AbbVie dropping to the 120s, and then after that, we'll be overdue for a rally to 200. Allogen Therapeutics has the CAR T-cell leukemia therapy, which by moving around DNA, inserts anti-cancer DNA into your own DNA and gives you a cure rate of 100%. You can get it into single digits now. We're looking for $20 by the end of this year. And this is how the CAR T-cell technology works. You take a string of DNA, use the T-cell to implant it into your own DNA, and it becomes part of you. And now all of a sudden you're immune to cancer. Amgen, one of the companies I was involved with in the early days, $24.4 billion in sales annually with a broad base of treatments, including chemotherapy, anti-cancer drugs, and anti-anemia drugs. See a fall to 220. After that, you want to load the boat because the next target is 300. Cassava Sciences is a big Alzheimer drug company, also involved in anti-opiate addiction drugs. Again, stock has been slaughtered this year. You can pick it up in the high teens. We have a target for the end of the year of $60. Illumina is into human genome sequencing, something else I was involved in the early days. As a result, the cost of sequencing your DNA has dropped from $1 billion, which was sequence number 1, which was for Craig Ventnor. Then it dropped to $1 million, and now it's down to 1,000 and soon to be in the hundreds. You know, these 23andMe services you get to find your genetic origins, those are all being done in China now by machines automatically who will do partial sequences to figure out where your ancestor came from. Oh, and if you're related to your parents. That's an interesting thing to know as well. We see it dropping to 300, then 400 by the end of the year. That is a DNA sequencer. For us to do this 50 years ago required a year, a team of 12 people, and then you only got the first 8 bases of a DNA sequence that was 3 trillion bases long. So plug it in, stick in a cell, and that's all you need to do now. That is the business that Illumina is in. So these are the big biotech trends you want to be aware of and invest along with, and you will be on the path to riches. Artificial intelligence. AI is now permeating every aspect of modern society, enabling enormous gains in medical research. AI will determine the success or failure of all drugs and therapies and companies from now on. IBM's Watson can read every research paper on cancer ever written within 8 minutes and spit out cross-references by the thousands. AI tied in with big data allows custom designing of molecules to target your specific personal disease. The AI big data combo will also cure every major human disease over the next decade, creating a $1 trillion a year market for cancer cells alone. Big data is the mining of massive databases now becoming possible for the first time by both government and private industry. Big data is getting new software applications to enhance understanding and massive server farms to house the data. This has delivered a tenfold increase in the rate of discovering new drugs and finding once impossible cures. Putting the DNA sequences of every person in Iceland into a single database has already cured several diseases. What happens when that approach is applied to the entire US population, the entire world? You cure a lot of diseases in a hurry. RNA vaccines came to the fore with the pandemic. They were in development for years before COVID came along. The initial goal was to cure cancer. Transfer of synthetic RNA into human cells teaches humans to create antibodies to fight any disease, will revolutionize all vaccines and possibly all disease treatments, not just for COVID-19, but everything. This was one of our early 50 baggers. We got into Moderna a couple of years before the pandemic even started. As a result, we got a 50-fold return on our investment there. It's sold off since, giving us another good entry point. And this is me getting my COVID vaccine up at Lake Tahoe. I got the Pfizer. In fact, we're an all Pfizer family now because the kids could only get Pfizer. Corona update is almost gone. Stunning 97% decline in cases in a month to 42,000 cases a day. Under fives will get their vaccine in July. All states have dropped mask mandates, including California, except for medical facilities. Pandemic is no longer a factor for the economy. It's going to zero by summer, so book those cruises. US cases topped 86 million, deaths 1 million, and deaths are down to about 500 a day now. This is the 2-year trend for the pandemic. We initially peaked at 250,000 cases. We thought we were home free, and then we got a peak to almost 1 million cases a day, which then literally in weeks utterly collapsed once a large number of people got it. This was the peak infection rate across the country. Every county virtually in the country was showing an extreme level of infections. This is that map today. I checked it this morning. And, a few hot spots here and there in Colorado, Kentucky, but really much of the country is COVID-free right now. CRISPR technology, another new trend you're going to have to know about. This is a cutting-edge gene editing technology created at UC Berkeley by my friend, Dr. Jennifer Doudna. It stands for Clustered Regularly Interspaced Short Palindromic Repeats. Say that fast 3 times. This is why you need people like me to go over this industry. You don't have to bother with these obscure terms. CRISPR is a custom designed molecule that can make a cut at a specific DNA location. It can be used to turn genes on and off, can also be used to insert new pieces of DNA to cure hereditary conditions. It's already cured sickle cell anemia, and some forms of glaucoma. It is at the forefront of finding COVID-19 cures. CRISPR applications can identify, cut, and remove a gene that causes sickle cell anemia. One person in Georgia has already been cured so far. Mass production is underway. CRISPR was used to make unborn twins in China immune to AIDS, but the doctor who did this was sent to jail for modifying the DNA of people who were not yet born. Research on genetic immunity to other diseases is underway. Are you ready to choose your own child's eye or hair color, size, muscle mass, and intelligence? I already know what you're going to pick in advance. Genes can be turned on and off at will, such as for appetite, which would cure the obesity problem in the country overnight. CRISPR therapeutics in a strong buy territory right now, trade all the way down to 45, pick it up on the next dive because we see the next move to $100 or higher after that. Okay. Stem cells. Stem cell is an early pre-cell precursor that can be turned into any kind of human cell. Today, stem cells are harvested from your own bone marrow, most commonly in your backbone, and then injected into the part of the body that needs repairs, like your knees. They then turn into the new cells where they are most needed, like cartilage in the case of my knees. Process is FDA approved, but not covered by insurance companies and costs about $1,000 per joint or $2,000 for 2 knees. I know because I just had it done 3 weeks ago. Had my own stem. I did it originally 5 years ago, had my own stem cells injected into my knees. Chronic pain went away in weeks and so far extended my own backpacking career by 5 years. Several of my readers have obtained the same results. When it wears out, you just do it again. Next time the stem cell source may be your fat cells, but not yet. This was all science fiction a decade ago, but today is commonplace. But when they say it's not going to hurt when they take the stem cells out of your back, don't believe it for a second. They actually have to hammer this needle into your back 20 times in order to get the stem cells they want. So I did it 5 years ago. I had such success. I had it redone last month, and I'll keep doing it every 5 years as long as I have knees. This is my latest stem cell, one hypodermic for each knee, each one full of my own stem cells there. This is the Trade Alert service that discloses all. Biomed Sciences is one of the players here, entering strong buy territory in the low 200s. We see this reaching 330 by the end of this year. Monoclonal antibodies, another fertile area. It uses a virus to give a mouse a disease. The mouse produces antibodies to the disease. Take the DNA from those antibodies, insert it into a virus DNA, gives the virus to a human. The virus DNA is incorporated into the human DNA, transferring immunity. This process is now being tried on COVID-19, arthritis, Crohn's disease, asthma, leukemia, breast cancer, and hepatitis C. And one of the side discoveries of this process, which is really interesting, is that we are able now to trace back DNA 50 million years and discovered that virus DNAs have been imported into the human genome since there were humans. It's been happening all along for the last 50 million years. So you constantly are discovering fascinating things with this technology. This is the transmission route that gets the DNA into your own DNA and makes you immune to the disease. Eli Lilly has FDA approval of monoclonal antibodies for COVID-19. We already got a 3-bagger on this. We're looking to buy at current levels in the 260s. We see an easy move next year to $320 a share. Medical devices enable enormous advances in medical procedures. It allows remote surgeries. A doctor in India can operate on a patient in the US. Great advances in material sciences bring hip and knee replacements that can painlessly last forever. Virtual medicine will be the next big thing to cut healthcare costs enormously. Pandemic greatly accelerated this with no human contact. Teladoc, of course, is one of the front runners here. The stock has just been absolutely creamed, down 70%. We see a buy at current levels and a recovery by next year to $100 a share. Booster shots, as a result of the pandemic, are another new large permanent market for the drug industry. 3rd booster shots are already approved, and then a 4th, when extended to the entire population, It'll be a gift for the industry. A combined COVID flu booster shot will be available in a year. It all creates a permanent market of 200 million shots a year for approved vaccine providers. That is a $4 billion a year business handed to you on a silver platter. Share buybacks, yeah, drug companies can go up for the old-fashioned reasons as well, and those are share buybacks. Biotech and healthcare companies are spinning off profits so fast, they are creating massive cash balances. Dividend demands of a low interest rate world are minimal, so there's nothing to do but buy back your own shares. When the supply of shares falls, the price can only go up. Amgen alone has a 15 billion share buyback program, or 10% of its total stock market capitalization, to retire every year. 1,000 invested in Amgen in 1983 is worth $2.72 million today. That's how the buyback business works. So I am offering you the Mad Hedge Biotech and Healthcare letter, the one sector you absolutely must follow on a daily basis. A twice-weekly read of the most important developments in biotech and healthcare, giving you the best stock plays. It includes time-sensitive trade alert service sent out at market sweet spots. It's research by seasoned, dedicated biotech and healthcare analysts. It will send you immediately actionable trading and investment ideas on every important stock and subsector in biotech and healthcare. Finally, the detailed understanding of biotech and healthcare you've long been searching for, one of the least covered industries in the market. It also includes the Mad Hedge Technology Leap service, a strategy to multiply your biotech profits from 5 to 100-fold. Leaps are long-term equity anticipation securities. They minimize your risk while maximizing your profits. They are ideal strategy for high-growth biotech companies, give you a very low risk with a very high return, are only issued when the highest growth, best quality stocks are extremely oversold conditions, kind of like now, and that is where the big money in biotech is made. I'll give you an example of a leap. The Moderna $90 January 2023 calls. I bought them for $10 when mRNA shares were trading at $70 in 2019. The break-even point was $80, shares up 12.5%. Moderna then rose to $190. The net profit there worked out to 1,100%. With high growth companies, a 12.5% gain is no problem, and a 2-year expiration makes this a total no-brainer. You only need 1 out of 10 for these to work to get spectacular gains. In reality, all of our Leaps recommendations in biotech have been winners. Mad Hedge track record is a proven history of delivering blockbuster biotech and healthcare trade recommendations. In-depth research reports on the target companies and industries follow shortly. Get in on the early stage of every big trend. Let a 50-year biotech and healthcare veteran translate his experience into winning trades. And yes, that is a 24-inch rainbow trout I caught in northern Nevada, if you were wondering. 66.63% trailing 1-year return. That's updated as of this morning. And an average annualized return for 14 years of 44.56%. That is 2.56 times the S&P 500. And notice that while the market has been crashing all year, we have been going up all year. We are long when markets are going up. We are short when markets are going down. And that way you have a performance that is always going up almost all the time. Here's how it works. Our market timing algorithm saw an opportunity to buy Gilead Sciences at the 60 level. So we sent out a trade alert. It says buy Gilead Sciences at $60.17 or best. And for a $10,000 exposure, you needed to buy 166 shares. What happened afterwards? Well, Gilead rose from 60 to 79. We then 32.7% profit in 3 months. We then sent out another trade alert saying sell or take profits. And in this particular trade, we made a profit of $3,270 in 3 months. So here's some of our other big winners over time. Thermo Fisher was a 3-bagger for the Mad Hedge followers. United Health Group, a 2-bagger. Medtronic up 70%. Zoetis, the animal healthcare stock, up 2 times. AstraZeneca up 2 times, and Sanofi up 2 times. Novavax was a 50-bagger from our original buy back in 2015. You need a real pro to guide you through the biotech and healthcare maze. Not all biotech and healthcare is monolithic. There are both great biotech stocks and awful ones. You can get a 10 times return on the great ones, but get wiped out by the lemons. This is what I'm not going to charge you for this service. I'm not going to charge you $100,000. That's what I charge my major hedge fund clients for advice on biotech and healthcare sector, and they're happy to pay because I make them millions of dollars. And I'm not going to charge you $10,000. That's what I charge my concierge clients for personal one-on-one counseling. And I'm not going to charge $1,500. This is the regular price on my website for the Mad Hedge Biotech and Healthcare letter. Only through this webinar, creating this product cost me millions of dollars with the best customer service in the industry. Running it costs millions more. 6 months for just $996. This is for new subscribers only. It's a one-time only 33% discount from the website price. Just click on the chat box on the right, and that will take you to our dedicated sales page. With your subscription, you will get a twice-weekly research newsletter highlighting the most important developments in biotech and healthcare, immediately actionable text and email trade alerts sent out at market sweet spots, same-day answers to emailed questions about specific biotech companies, special reports on the dominant trends and players in the biotech and healthcare industry, access to a biotech and healthcare 13-year database. Getting an unfair advantage is the most important investment theme of your lifetime. Is the best decision you will ever make. This is the Mad Hedge Biotech and Healthcare letter. Shows up in your inbox twice a week. And this is the Mad Hedge Hot Tips, which you will get in your inbox every morning before the market opens, with the 5 most important things that happened that day and what to do about them. You also get a copy of my best-selling book, Stocks to Buy for the Coming Roaring 20s. So here's the offer you can't refuse. Let me show you how to make the money to pay for your own subscription. Subscribe now, and you will immediately receive an urgent trade alert on the 2 tech stocks that you must buy right now. Probably cover the cost of this letter for the first 3 months, if not several years. Just click on the chat box on the right. Buy now and you will instantly receive a biotech trade alert with an extremely high probability of success that you can execute immediately and make some of the most serious money in your life. 90% of these trade alerts make money immediately. And it is time to go flying once again. Okay. When you make millions of dollars for your customers, you get a lot of pretty interesting invitations. $5,000 cases of wine, free tickets to the Olympics, and dates with movie stars. So it was in that spirit I made my way down to the famed beachside community of Malibu to meet long-term Mad Hedge follower Richard Zeiler. Richard is a man after my own heart, plowing his millions in trading profits into a ground-up restoration of a 1929 Travelair D4D biplane. This particular plane is quite famous because it was featured in a 1930 war movie, Hell's Angels, which won one of the first Academy Awards. However, Richard had to buy 20 other Travelairs to get the parts needed to return this one plane to flying condition. The modernized plane has a 300 horsepower engine and carries 62 gallons of fuel. Since I'm one of the few living tailwheel qualified pilots left in America, Rich was happy to let me have the plane for an afternoon where me and my kids buzzed the surfers on the California coast. Let me make millions of dollars for you as well as I have done for thousands of other followers over the last 14 years. I look forward to working with all of you. And this, let's see, get it to stay. Okay, this is a picture from 1929 showing the exact same airplane. This one, you can see the camera is up on another plane up above in making of Hell's Angels. This is the trade alert I will send you as soon as you subscribe. Buy now and you will get this trade alert in seconds. This company is about to introduce a new blockbuster drug. You have to go through 1,000 charts to find one that's good. Let me do the heavy lifting for you. Get in while stocks are cheap. Okay, 6 months for just $996. Click on the chat box on the right, and I will take your questions. Okay, Kate, have you got the link in the chat box on the right?
Yep, we're good to go.
Okay. Question from Bill in Portland, Oregon. Can we talk to you directly? Bill, I spend part of every day calling readers and looking for ways to improve our service. You can email me anytime. I always answer the same day. And you get a chat box with each of our bi-weekly strategy webinars like this one. I always love customer questions because it shows me where answers are needed, and I go out and find them if I don't know the answer. So always welcome customer contact. That's how we're able to evolve our product every day of every year for the last 14 years. Okay, and I can see, just heard a subscription come in, and let me see who it's from. Okay, let's go to our store. All right, we have had a couple of people come in already. By the way, we limit our sales to 25. So if you're thinking about it or hesitating, get a move on and get your order in, because we don't want to overwhelm the market with too many buy orders at one time. Okay, we have Frank from Columbus, Iowa, just subscribed. Thank you very much, Frank. Promise to work hard for your money. And please check your inbox. That trade alert is there right now. If today is the bottom of the market, it probably is the bottom for the day. You want to get into that trade alert because I can see it's already starting to move. Okay, we have Peter from Shreveport, Louisiana just came in. Thank you very much, Peter. Promise to work hard for your money. We have Ian from Cambridge, England. Just subscribe, Ian. Thank you very much. Please check your inbox for the trade alert. If it's not in there, please check your spam folder. If you're a brand new subscriber to our services, that's sometimes where they go. Okay. Let's see. Let's see. Right. Okay. And let me get my chat box up here. Does your in-service include the leaps? Yes, it does include the leaps. Our goal is to make people the most money possible. However, leap entry points are pretty rare. Usually only happens once or twice a year. And the answer on leaps is a very firm not yet. So once we get a final bottom and markets are starting to trend up again, then we'll be knocking out the leap recommendations as fast as we can write them. Last time I did leaps was a year ago. We did it in technology stocks, and we got 100% returns on everywhere we did. Okay, let's see. Is that a free ride in the biplane? It was actually. Me and my kids took it out for an hour and we had an absolute blast. I have 50 years of flying experience, so I'm pretty comfortable in the cockpit of just about any plane. Do you recommend shorts? The answer is absolutely yes. And we basically only did short plays for the first 3 months of this year. And we made a killing. That's why we're up 47% on the year. We're not doing shorts anymore. The entry point is now gone. We're now looking for long entries, but we're saving our longs for those down 1,000-point days, kind of like today, where I was putting out some buy trade alerts. Okay. Let's see. Will rising interest rates hurt biotechs? The answer is no. Biotech is one of the few sectors completely immune to the economy and completely immune to rising interest rates, because people get sick and want to get cured, whether interest rates are rising or not. So it is a great defensive sector. You see a lot of institutional money moving into the area right now for exactly those reasons. Okay. Is there a future for marijuana stocks? Answer no. I'm not a buyer of the marijuana argument, and so far that's been prudent since a lot of these stocks are down 80 or 90% now. How hard is it to grow a weed? Anybody can go, I can grow marijuana in my backyard if I want to. The barriers of entry are zero. Anybody can do it. The way you make a lot of money is you buy a stock that has a very big moat, which nobody else can get into, or it costs billions of dollars to get into, kind of like a Google, an Apple, or an Amazon. Where is TLT going down to? I started shorting TLT at 180 2 years ago. My target then was 110. We got down to 108 this morning. I'm sticking with my 100 target. I think the short play on bonds is just about gone. Anybody who got into that doubled, tripled, or increased their money 10 times, depending on how much leverage they have. So I'm actually telling people to take profits now on their bigger, longer term shorts. I think the high for interest rates is 350 and we hit 348 yesterday. So, maybe we get to 4% by the end of the year, but after that, I don't see much more. Okay, other questions? Is oil a short now? No, I think oil is going to go to 50 and then it's the short of the century. I think you're going to get a double top, 14-year double top, 2008, and then this year at 150, and then it goes to zero. And that is why the oil industry doesn't want to invest anything in their own industry. Why put money into a sector where the product is going to be worth less than half in a year? And that'll happen one of two ways. Either Russia will give up on the Ukraine, that'll knock $50 off the price of oil tomorrow, or we'll go into a recession and that'll knock $50. One way or the other, oil is going down. What it does on the upside in the short term is anybody's guess. Okay, do you like psychedelics? Not really. 50 years ago in Hawaii, after I finished my college degree, maybe. But these days, too many more interesting things to do than to get stoned. Okay, any other questions here? Okay, we got about 10 more minutes. Jim in Dallas, Texas is asking, are the trade alerts for stocks, ETFs, or options? Jim, all of the above. We send out a range of possible securities with every trade alert so readers can tailor it to their specific needs and risk profile. So if you just do stocks, that's fine. People make a fortune on our stock alerts only. If you want to get more sophisticated and do ETFs or options, you're welcome to do that too. What do you see for the odds of a recession now? I'd say 50-50. If we do get a recession, it'll be a very light, shallow one, probably only 2 quarters. And the the second quarter ends in 3 weeks. We've actually been in a recession for the first half of this year. We just didn't know it because the economic data lags so far. Okay, Joe in Detroit, Michigan is asking, I've never done this before. Can a beginner start with no prior experience? Absolutely, Joe. Bringing in beginners into the market for the first time is one of the primary goals of this service. Okay, Joel in New York City, how often is the newsletter sent out? The biotech and healthcare letter goes out twice a week, every Tuesday and Thursday. That gives you about 100 letters a year. Mary in Kansas City, how many trade alerts do you send out? It depends on the sector, but in the biotech and healthcare letter, we can send anywhere from 10 to 30 trade alerts a year, depending on what's happening in the individual companies. Okay, Joseph in New York is asking, is the strong dollar over? Answer is no. With the interest rates rising at 75 basis points every 6 weeks, I think you can count on the US dollar to go higher before it eventually collapses also. Rising interest rates usually make the strongest currency in the world, and right now that is the US dollar. Okay, let's see, any more questions? Let's see, Gary in Garden City is asking, you obviously have enough money. Why are you doing this? Well, teaching people how to make money and secure their financial future is the love of my life. When I was on Wall Street, I used to see so many people get ripped off by brokers, it made me insane. This is my chance to level the playing field for the regular guy and get even. Okay, any more questions? Let's see. Ivan in Portland, Oregon is asking, how would you describe your trading philosophy? Ivan, I use fundamentals for my long-term call and technicals for my short-term execution. Every long-term pro has the same approach as I do. Okay. Any more questions here? Roger in Richmond, Virginia wants to know, do you offer training with a subscription? And the answer is we include more training than you could use in a lifetime with books and training courses. Every trade alert we send out includes a link to a 20-minute video on how to execute that trade into the market. So we use every trade alert as a teaching opportunity that way. Here's a good question from Jeff. What books on investment had the most influence on you? And the answer is there's two, really. Graham and Dodd, The Intelligent Investor, gives you the really basics on how to look at a stock, analyze it, decide whether it's cheap or expensive. This is the one that influenced Warren Buffett when he worked for Benjamin Graham in the late 1940s. And yeah, the book is 70 years old, but some things never change. What you will be amazed is how cheap stocks were in the 1940s. He's talking about PE multiples of 1 and 2 for major companies. Now it's more like 10 and 20. And the other one is the, it's a bond book. Hold on a second, I'm gonna go grab it. Well, there was a basic book which covered all aspects of the bond market, but I lent it out to somebody, so I can't find it. So I can't remember the name, but it's written by a guy who used to work for PIMCO. And having a knowledge of the bond market is crucial to your overall understanding of financial markets. And of course, we've made a fortune shorting bonds over the last 2 years, so I would highly recommend that. Okay. Okay, and let me see. We have just a few more minutes to go. And let's see if I can find the name of that book. People don't know very much about the bond market. So having a knowledge of the bond business gives you a big advantage. Okay. And I think it's called the Strategic Bond Investor. But let's make sure. That's it. Strategic Bond Investor by Tony Crescenzi, my old friend. He's kind of dropped out of circulation, but this is an absolutely must-have book if you're going to understand the financial markets. And they get into the more obscure corners like mortgage-backed securities, municipal bonds, and so on. And I know a lot of brokers out there make their bread and butter on muni bonds, and Amazon has it for sale for $22. So yeah, Strategic Bond Investor by Tony Crescenzi, and whoever borrowed my copy, I want it back. Okay.